Let's shift focus back to the Zimbabwean markets now and take a look at what's driving them. On the day, we've got Jubelah Magutakuona, who's a senior fund manager from BancABC, joining us on the line. Jubelah, thanks for your time today. So, of course, the story continues. The market's strong this year when it comes to the Zimbabwean market. Industrials up 22%. Fantastic year when it comes to volumes as well. I mean, sitting at around $2 million a day, and that much higher than other regional peers. And, of course, we know the Botswana Stock Exchange, Zambian Stock Exchange, all sitting below $1 million per day. It doesn't really compare to the likes of Nigeria and certainly not South Africa. But from a trading perspective, does this increase the case to get involved in Zimbabwean stocks?
Yeah, I think it's a very interesting market, and what we've really seen so far this year is that the broad market itself is up 22%, and the resources index is up 24%. And don't even try to annualize those numbers. But at a daily average volume of 2 million, certainly that number, when it's stacked up against other African markets, it's really high up in the pecking order of market liquidity. If you have to take out South Africa, of course, but if you start looking at Nigeria, Kenya, Ghana, and Tunisia and the like, I think it stacks up, very nicely.
Mm-hmm. What is certainly interesting is that while foreigners were driving large caps last year, and I suppose globally it was called the year of the large caps. Certainly here in South Africa we saw large caps reigning supreme, but it's mid caps this year that have attracted many foreigners. Why do you think a shift into mid caps, and where are you seeing specific buying opportunities there?
I think this has been an interesting phenomenon. We have seen, the switch from large caps into the small cap, the mid caps. I think what has really been driving it is one fundamental issue, that when you look at it, this strong performance, the year of the large caps and all that, has meant that in terms of overall market weight, large caps, in our case, for example, which are the top 10 counters, they now constitute about 75% of the overall market basket, relative to around 60%, which is what we would have expected or to see. So what that means is there's now a significant value that is still trapped in the mid caps, and which is why we are seeing these interesting opportunities. And the other issues also have been that performance-wise, earnings-wise, the numbers have really been coming through very strongly from some of the mid caps, and they are really looking attractive from a valuation point of view.
Mm. Mm-hmm. Certainly, very much domestically orientated, the likes of OK Zimbabwe, Dairy Board, Milk Processing Company, and Tobacco Sales Limited. But let's move on to the banking sector. A lackluster start for the banking sector relatively to the overall market. I mean, if you look at the performance this year, not a lot of interest. I suppose it's still issues around liquidity, the outlook for the safety and security of investing in a bank sector, which is still quite frail right now. CBZ reporting results today, full year results. What are you expecting when it comes to those numbers and relative to where the stock's trading right now, and of course still seeing it as attractive? Do you think a good buying opportunity?
I think for CBZ, certainly when you look at it, it is the biggest local bank by assets and by deposits, and certainly over the past few days been in play because of this upcoming full year 2012 results, which are coming up this afternoon. And certainly our expectation is that we'll be looking at a forward PE of 1.5 to about 2 times. And certainly most of our banks here have really been trading at very discounted PEs, very undemanding PEs, and we think that that's really ridiculous, even if you were to put into account the fact that there are credit losses, there are concerns about the quality of earnings and things like that. But we think that banks are discounted. But what we've also seen is that certainly over the past 2, 3, 4 trading days, that the price per share has certainly increased, and it's now up 21% year to date.